Hello everyone. If you're holding Datavault AI, or even just watching it, you need to hear this carefully. Because something serious just happened. On February 24th, Datavault AI received an official notice from Nasdaq. And this wasn't just a routine update, it was a warning. The company was informed that it no longer meets the minimum bid price requirement to stay listed on the Nasdaq capital market. Now let's slow this down and break it apart clearly. Nasdaq has a rule, Listing Rule F550A2. It says that for a company to remain listed, its stock price must close at or above $1 per share. That's the minimum threshold. Datavault AI stock has closed below $1 for 30 consecutive business days. 30 straight trading days. And that triggered the deficiency notice. Now, before panic sets in, this does not mean the company is being immediately delisted. Trading continues as normal. Shares are still listed on the Nasdaq capital market. But here's what it does mean. The clock has started. Datavault AI has been granted a 180-day grace period to fix the issue. That gives them until August 24, 2026 to regain compliance. So what do they have to do? Simple in theory, harder in practice. The stock must close at or above $1 per share for at least 10 consecutive business days during that 180-day window. 10 straight days over $1. If they achieve that, they're back in compliance. If they don't, they may qualify for another 180-day extension, but that depends on whether they still meet other Nasdaq listing standards and whether they formally notify Nasdaq of their plan to cure the deficiency. And yes, one of the possible options includes a reverse stock split. Now let's pause right there. A reverse stock split doesn't change the company's valuation fundamentally. It reduces the number of shares outstanding while proportionally increasing the share price. For example, if a stock is trading at 50 cents and the company executes a 1-for-2 reverse split, the price would theoretically move to $1. But investors often react emotionally to reverse splits. So while it's a tool, it's not always welcomed by the market. Datavault AI has publicly stated that it plans to monitor the situation closely and evaluate all available options. However, the company also clearly acknowledged that there's no guarantee they'll regain compliance or maintain listing standards. And that transparency matters. Now here's where things get interesting. While the stock price has been under pressure, the company simultaneously announced some very aggressive forward-looking developments. First, they revised their fiscal year 2025 revenue guidance upward. Originally, they projected around $30 million. Now, they're forecasting between $38 and $40 million. At the midpoint, that's $39 million. And according to the company, that would represent roughly 1,300% year-over-year growth. That's not a small adjustment, that's a massive revision. The increase is being attributed to higher customer tech licensing fees and expanded services within their data science group. So on one hand, you have a stock below $1. On the other hand, you have projected explosive revenue growth. That contrast is what makes this story complicated. But there's more. Datavault AI also announced a record date of March 9, 2026 for the distribution of Josh Gibson coins, a dividend tied to digital assets. The distribution itself is scheduled for April 30, 2026. They've also adjusted distribution dates for warrants and Dream Bowl Meme Coin 2 tokens, pushing those to February 27, 2026, while keeping the earlier record date intact. In addition to that, the company revealed plans to launch a Josh Gibson stablecoin. And beyond just launching tokens, they're building name, image, and likeness strategies tied to their digital asset exchange. They even rescheduled a separate warrant distribution date from its original timeline to February 23, 2026. So step back and look at the bigger picture. This is a company navigating two very different narratives at the same time. Narrative 1, a compliance warning from Nasdaq because the stock price has remained under $1. Narrative 2, revenue expansion, digital asset strategy acceleration, dividend distributions, token launches, and projected triple-digit, even four-digit growth percentages. Those two realities are colliding. And markets don't always move based purely on revenue forecasts. They move on confidence, structure, execution, and perception. The next 6 months will be critical. Can the company organically lift its share price above $1? Will they implement a reverse split? Will revenue growth materialize as projected? Will their digital asset initiatives gain traction? Right now, nothing changes operationally in terms of listing status. Shares continue to trade, but make no mistake, the deadline of August 24, 2026 is now a key date to watch. And for investors, the risk-reward equation just became sharper. Because when a company is fighting to maintain compliance while simultaneously projecting explosive growth, volatility often follows. This situation is developing. And if you're watching Datavault AI, you'll want to pay close attention to price action, compliance updates, and execution over the coming months. The story is far from over. In fact, it may just be entering its most important chapter. This is not financial advice.